Hello everybody, how are you doing? I'm back with another video on Palantir technologies. I made another video before about pre-earning report, and this is post-earning report. As I had mentioned in my previous video that Palantir technologies, they will beat the estimate. They have been beating the estimate from last 2 quarters, and I was pretty sure they will beat it this time as well. As you know, Palantir Technologies, they are data analytic company, and they have two softwares, Gotham and Foundry. Gotham software mostly is used by US government organizations, and Foundry is mostly for commercial organizations. And they have been growing their revenue in both the sectors. So let's have a look at their earning report and their future guidance and see if this stock still a buy or we have to wait. Let's get started. First of all, key highlights. Their revenue grew 49% year over year. That's pretty impressive. The US government revenue grew 76%. US government business is 83%. On the commercial side also, they had 19% increase in their business. That's good growth, and out of this, it's 72% is in the United States. So United States commercial growth is 72%. Their operating margin is 34%, which is pretty impressive. Normally 10 to 15% is pretty good, but 34 is pretty impressive. And adjusted free cash flow margins of 44%. So these are all pretty good numbers. Let's look at the earning report in detail and see what each of these number means, and also the future guidance. So that's their earning report. So key highlights, as I mentioned, revenue growth year over year, 49%. It was 229 million in Q1 2020, and in this quarter it stands 341 million US dollars. The forecast estimates was they will do 333 million US dollars, but it came pretty high. It came higher than that, 341 million US dollars. Their adjusted operating income was 117 million US dollar with the 34% adjusted operating margin. Operating income is nothing but a profit from the total sales. If you decrease the wages, depreciations, amortization, cost of goods, all those things, you are left with operating income. And your operating margin is basically your operating income divided by the total revenue. So 34% is pretty impressive. As I said, 10 to 15% normally is good. It depends business to business. Business is relative, but definitely good. Free cash flow 151 million US dollars, and free cash flow margin is 44%, which is spectacular. Again, free cash flow margin is cash flow divided by your total revenue. So it's pretty impressive. Their revenue grew 49%, which was higher than their guidance. They beat the guidance 45%. You can see these numbers right here, 229 million to 341. We already discussed it. US government business. Out of this, US government generated 208 million US dollars. It's 76% year over year growth, with 83% from US government customers. So they had increased their revenue in the US with the US government. The rest of it's from commercial business, 133 million US dollars, and it's up 19%. Out of this, 72% is from US commercial customers. So as we know, their majority of their revenue comes from the US government and small portion from the commercial organization. But I think over the years, as their software or their platform will expand, go more from pilots to more in expansion phase, I think their commercial revenue might expand. There are 15 deals worth more than $5 million, and 6 deals worth more than $10 million. That's impressive. Average contract duration is 3.7 because they sign a contract. Contract duration with commercial customers is 4.6 years. Revenue per customer also grew from $6.3 million to $8.1 million. That's 29% increase. So the future guidance for Q2, they're looking at a revenue growth of 43%, $360 million, and with adjusted operating margin of 23%. I hope they will beat it again. Full year guidance, raising free cash flow guidance from break even to in excess of $150 million. That's pretty good, from break even to 150 million. Palantir Technology has forecasted more than 30% compound annual growth rate for next 5 years, that's pretty impressive long-term growth rate. I think they have potential to grow much faster than that. I believe they have differentiated and disruptive technology to attain those numbers, and I do believe this company will do well in the future. Having delivered a pretty strong earning report, now the question arises whether the stock is still a buy or not. So let's have a look at their stock. Currently, they are trading around $18.89. It's sold off very heavily today. There's a lot of the news of inflation data was very detrimental to all the tech stocks. All tech stocks, including Palantir, sold off very heavily today, 6% down even after hours is down. Analysts are not too bullish about this company. There's rating underweight, underperform, perform, some downgrades here. I think they're still trading at very high valuation, the price to sales ratio of 18. I think this stock is still expensive. Let's have a look at tip ranks. There are 9 ratings, 2 buy, 3 hold, and 4 sells, and with highest price target of $30 and lowest $17, with average price target of $21.7. So looking at current valuation, I think from my perspective, Palantir is still an expensive stock, and there are also some risk involved right now. I think majority of their revenue is concentrated with very few customers. I think Palantir Technology is a great company and their long-term potential is great, but at this stock price, I think I'm gonna wait. If it drops below $15, I will start adding to my position. So let me know your insight on this stock. What do you think? Leave me a comment. I would really appreciate it. Thanks for watching, and if you like my content, please do subscribe to my channel. Have a good day. See you next time.